Hey folks, welcome to the Pipnotic Symposium for the 7th of July 2020. Today we are going to talk about shorter term trading, as I know there's a lot of interest in doing that. I'm just going to change the settings here. So we have the risk reward multiplier, ratio rather, is set to 3, and the price and balance release period is set to 2. Then we're going to have these really strong pushes. Okay, so you can see here we had this one here, which was tested here. We had this one here, which was tested here. We had this one that was tested, went a little bit deeper, went into the parent. This is the child. We had this one here, which is a tiny one. Price went up to it a little bit beyond, and then we turned around, and we have a few areas just below price just here. You can see that this pair, which is the Australian dollar Japanese yen, really respects the rectangles drawn by the software. Got this one here. We had a nice respect for it. Finally popped through just here. So this is the one that removed this one. Price tested this once and twice. And so we have some phenomenal configuration settings for this particular pair. And I don't change them based on the pair, but you'll notice that some of them will respect these areas better than others. And the Australian dollar Japanese yen is one that really respects these. And you'll also notice that on some time frames there's a lot of respect for these areas. On other time frames there's less respect. But I think the main thing to remember is that just remember the way that we like to confirm that an area is valid, and that is identify areas that are capable of consuming opposing areas. Okay, so if you have an area that looks good but you're uncertain if it's the right area, then look for an area that area has consumed, and I think you'll be doing very well. Okay, so shorter term trading. I'm just going to go to the extreme and just pop down to the 1 minute chart, because this is, I never trade on this time frame, but I look at this time frame quite a lot just for learning purposes, because I like to see how these areas have been created, and I like to see what price does at these areas. And so if you look at this, the software is identifying areas like this one and this one, and you can see many of them have been identified and many of them have been removed. But notice that the ones that have been removed, these are marked off by the dotted boxes, they've seen respect, and if you use a tiny bit of discretion. So when you see an area, ask yourself, first of all, is this a parent or is it a child? And if it's a parent, then you're good. If it's a child, then look for the area that it reacted to. So look for its parent. Okay, and this will keep you generally out of trouble. Okay. Okay, so if you look at this one here, this one here, this was just a very nice release. Price came up to the area, we poked through it. We had this one here, which is a little bit deeper, so the buy zone goes higher for this area, actually all the way through it. So when you see something like this, where you have an area that has formed above an area of supply, well, that's telling you that this is the sell zone for an area of supply higher. We have this one here, so price went up, the slingshot was pulled back, and then we left. And so for this one here, we have the area that looks like that. Okay, so this is the one that would be interesting to us. And price came pretty close to it, but we didn't move all the way through. We actually stopped at the child, we tested that, and then we left. Then we formed another child area, and then we left. Okay, so always remember to look for the parent, because this is super important. Actually, I'm going to go to the 5 minute. That's a little bit messy there. Okay, so when you're looking at a very small time frame, the 1 minute, the 5 minute, the 15 minute, whatever, you still have to know what's going on the bigger time frame. So before you do anything, it's just good to maybe click on the 4-hour chart and see what's going on. And you can see here on the 4-hour chart that we're actually reacting at a sell zone on the 4-hour chart. So that's telling us, well, shorter term we're probably going to be looking to move lower. So then you go to your small time frame, the 5 minute or the 1 minute or the 15 minute, whatever. Then you look for these areas that are interesting, and you can see here that we had this area here, but now this one's gone. Just going to mark this one off. It was tested once here. We had a nice area that went, we tested it, we went up to this sell zone, and then we left. Okay, and so this one is now gone. And so the area that removed it is here. It's this one just here. Okay, so this is where we have the sell zone for this area of supply. But also notice, where do we have an area that was tested and then violated? And you can see here that we had this one. If I just grab an average of the lows, maybe looking something like this. We had a test, we didn't close below it. We had a test, we had a test, we didn't close below it. And so where are we seeing the strength originate from? And the strength is originating from here, right here. This is where you can see it. Okay, so you have this candle, the body of this is in the range of this one, the body of this is in the range of this one, but this is not a distribution candle. So we have two candles. This is a candle that left the high of the candle. The slingshot was pulled back to here. So this is what this area would look like. And so we can expect price to move back to this area or around here and then depart. Okay, and the reason I'm putting this one here is because here, this is where the bodies of the candles are. Price sat on this area, we went up, we went down, we opened, we went up, and then we dumped. And so the flip occurred at this line just here. Okay, so price went, we had an attempt to close below here. You can see price finally closed below. We managed to move below this one here. We distributed, and then we managed to, well, so far close below this one here. And so we can expect price to have a bounce at the 74.75.9. Okay, and so it's a pretty precise area, and we have a tiny stop. The stop is 4 pips, which is tiny, so be careful. Some platforms will spread you out, so the spread will be big enough for you to hit your stop. So you're going to want to have to just be a little bit careful with that, because that'll happen quite a lot. But notice that these areas are going to occur everywhere, and they are very, very powerful. When we had this one here, tested, huge departure. Area here, tested, huge departure. Area here, tested, huge departure. We had an area here, it was tested, we had a huge bounce higher before we finally moved through it. So you'll see these everywhere, and you'll also notice that they are very, very powerful. Okay, so just try and use, lean on the software, but use common sense at the same time. Okay, if we look at this one here, we had price gap down, we accumulated for a little bit of time, and then we went flying up. Okay, we also have a 1 hour area of demand at this area here. That's telling us that we have we had a lot of buying pressure at this price point, and that's not that long ago. And so maybe there's also an interest to transact at this area here. So we have something down here. This is again a tiny position. So you want like a pretty decent stop. And this is actually why another reason I don't like to trade on the small time frames, and that is because, I mean, the stops have to be quite big in order to avoid being spreaded out, and so the risk reward ratio kind of falls to pieces. And so I just like to, I mean, you can keep in mind where that is, but maybe go for a 1-to-1 where you have kind of something like this, and then you have your target somewhere up here, because I mean a 5 pip stop, I mean that's kind of crazy. And so just be aware of that, and we'll leave it on there, and maybe before we're done with the video, price will have bounced back into that area, and then we can see what happens there. Okay, let's have a look at another pair. It doesn't really matter. Let's take the Swiss franc Japanese yen just to mix it up. So let's go to the 15-minute chart. Okay, so we all have the software, we're using the software, it's a phenomenal tool, and so the next piece of advice is that you have to trust the software, because the software is not drawing random levels, it's drawing levels based on a time-tried algorithm that works very, very well. And so you have to trust the algorithm, and so you have to trust the software essentially. So the fact that it's drawing this area here, it's telling us that there's a good reason that price is going to bounce to that area there. And so look at this area. Use some discretion when you see this area and make decisions based on that. The fact that the software has drawn it for us is telling us that there's a likelihood, there's a probability that price is going to bounce at that area. And so trust it, trust the process, and then say, okay, has this area removed an opposing area? Well, if you look at this, you can see super clearly here that we had prices trying to move me up this price point historically. We had a test, failure, test, failure, test, failure, deeper test, deeper failure. Price rallied, we moved sideways, we went up, we moved sideways for one period, we had an accumulation of one period, and then we went flying up. Price moved above here, we removed whatever it is in here that was causing price to respect this area, so we had some resistance, and the origin of the area is just here. Okay, well, the area of demand that did it is just here. The origin is down here, of course. And so this is just a really interesting piece of information. And so you look at this price point in the future, and price even gapped down here just to the top of the area, and then we went up. We had another go, price was pulled back, and then we left. Okay, so trust the software. I mean, it works very, very well for a reason, and so, but we need to trust the software. And sometimes I have a difficult time trusting the software because I think that I know I trust my discretionary process a little bit more. But the software is there as a tool. It's there for us to use it, and so it's very important that we actually trust what it's telling us. Okay, so let's have a look at something else. Let's try this on the hourly chart. If we look here, we can see that we had an area that was tested, failed, tested, failed, tested, failed, and then price managed to move above this area. So we did have something around here. It was tested several times, and this is the area of demand. This is the origin of the push that went through it. So this is where we look to trade. The price went to that area, we went a little bit below it, and then this is where price left from. Okay, with the same thing here, we had this one here, we had an area that was tested many times, price finally moved away, price came back to it, and then we left. We didn't have a big reaction, but price left. We had this one here, how we had a less beautiful area, price went up, we came back, we rallied, accumulated, we went up, we came down, we went a little bit through it, we came down, we started to distribute at the bottom of this area, and then we cut through it. Okay, so this area here is responsible for consuming this. So this is where we would target to sell, just here. We take both of those candles. This is roughly where price is having a bit of a bounce at this moment. Okay, so trust the software. It's there, it's powerful, and it's we can use it. And obviously not all of them are going to work, but we don't need all of them to work. We just need the ones that aren't working. We only want to pay 1 unit, but the ones that are working, we want to maybe pull out 2 units or 3 units or more. And if you look at this one here, this is this tiny area. It left, we had price testing an area here and here and here. It managed to move through it from this area. This is where we trade. Price came to that area, then we left. We got about a 2 or 3 to 1 on that one. Okay, we had another one here. Price tested this area. We didn't manage to close above this area. We did from here. Price went up, we came back, we tested it, and we went back up to the highs. This is also a 3 or a 4 to 1. Okay, and so you'll see these all over the place, and the more strict you are with the parameters, so if we have, for example, risk reward multiplier, this is a 3 to 1, and we want the move away from that area, we want the 3 to 1 risk reward ratio to have been reached within 1 period. I mean, those are very, very strict parameters. That's a very, very strict parameter. So you're going to see fewer levels, but the ones that you see are going to be quite good. You can also say, well, actually, I'm going to allow 2 periods. Okay, and so you'll see here that we'll get a few more areas on the chart. You can see, but then you'll see other ones are going to fail a little bit more. So we had this one here. We had 2 periods. So price moved away from this area for 2 periods in order to reach that 3 to 1 reward risk. Price came down to, we closed on the edge of the area, price went up, the slingshot was pulled back, then we cut back. Okay, so you'll see more of these, but they'll be less accurate. What do we have? We have this one here as well. Price tested this area quite a few times. The move that removed it originated from here. This is roughly where price came to. Now we've obviously turned around and now we're struggling with this one here, which consumed this one. Okay, but it's better to have extreme readings like this as an example and take fewer trades that are better. So fewer better trades. If we go to the bigger time frame, let's have a look here where, I mean, here we don't really have a lot. We have this one here. This one already worked. This price left, we came back, we tested the area, and we had about a 4 or 5 to 1 on that area just here. Before that, we had this one here. Price left this area, was tested. We had a huge move away. This is where price went to before it left. We had this one here. Price left. Price came to that area, poked a little bit through it, went down a little bit deeper. You see the sell zone is getting a little bit deeper, and then we left. And there's nothing for quite a long time. That's it. That was all there were. These are all the trades that were being qualified here. With a bit of discretion, maybe you'll see this one here, maybe not. If we go to the daily chart, what do we have here? There's nothing here on the daily chart by the looks of it. Maybe on the weekly you can see something. Let me remove this. There's nothing here, but let's have a look on the 5 minute or the 1 minute and see if there's something here. Okay, so we had, this is the area we saw a moment ago. We had the cutaway occurring from here. This is where it came from. We had a cutaway, we had price testing this one, but from this area we managed to trade below whatever it was in here that was holding price. So this is where we can expect price to react at. Price came to that area and then we left. Let's go to the 1 minute. See, here we have another one, a nice departure, price moving below this area here. Price came, we accumulated just below it, we cut through it. So this one is responsible for moving this one. Price came to it, you see the white candles, and then we left. We had this one here, we had a lot of micro resistance, price cut through it, we came back to this area, then we left. Okay, but there aren't a lot, as you can see. We had this little tiny one here. Price left, we came down, we sat on top of it, we cut through it, and then price went away and moved away and all the way through it. We had this one down here. Price went away, went higher. Price tested this area quite a few times before finally cutting through. This distribution removed this area of accumulation. We tested it and then we went down. We formed a sell zone for this area of supply. Here we went a little bit deeper and then we moved away. Okay, so as you can see, I mean, the software is super powerful. It's super powerful. So trust the software, trust the process, and get trades on. Just put a lot of trades on. Trades that are qualified, trades that are fulfilling the criteria that you have as a trader, and just get a very nice sample size of 50 or 100 trades. Never question the process, just do it. Okay, and do it on a demo account, and do it over and over again. I remember when I was starting out, I would get into a trade, and because I like to trade on the bigger time frames, price would come to my entry, I'd get filled, then the price would sit at that level sometimes for hours and sometimes even days and weeks. And earlier on I would normally bail on the trade when it started to get a little bit negative or it started to get a little bit positive. But over time I learned to accept that if price reaches an area of weekly demand or supply, it takes a long time for the flows to shift. And so price has to sit on that area. We have to continue to distribute liquidity at that window of value, and it's a slow process, and so I'd have to be very patient. And eventually, if I didn't click out of the trade early, then normally it would work out and price would start to wriggle away from the area. But the process is slow and it takes time. Obviously, if you're trading on the 1 minute and the 5 minute and the 15 minute chart, the waiting time is a lot smaller, it's a lot less, and so you can get into these trades and you can see very quick results. You can see very quickly if the trade is going to work or if it's not going to work. And that's because these 1 minute pools of liquidity are quite small. Sometimes they're big, sometimes they're not big enough, and you'll see them unfolding before your eyes, normally in a matter of minutes. Like this one here, you saw this area here, price came down, price went up to that, and within, this is half an hour, 1, 2, 3, 4, 5, within 2.5 hours you found out actually this area is not going to work. Okay, good. let's have a look here. Yeah, price, you can see this one here, price went down to the parent. We had the parent, price formed the child, we came back, the slingshot was pulled back, and then we left. So price is still sitting on this area here. Okay, and so we just have to be a little bit patient. This has been gnawed away, but notice from this area here, there's black space from the release all the way over to where price currently is. And so initially we had a deep sell zone here. Price kind of tested this child a couple of times. We went a little bit deeper. We went to this one here. We tested it. Price went a little bit deeper. And you can see here we have a sell zone. We have a sell zone. So price keeps going deeper and deeper and deeper. And then eventually there will be no SPY or sell zone, and then it'll start looking for the demand and the supply. And you can see that we have the demand down here. This is the sell zone, the deepest sell zone. It's been tested. That means we don't want to check it again. You don't want to trade that again. You want to wait. You want to look lower. So price comes lower, and this is probably where we're going to see a reaction later today. Good. Well, I'm going to leave it at that. I'm going to keep this one short, but I hope that helps with the shorter term trading. Essentially, it's just important to trust the process, trust the software, and put on as many trades as possible that are qualified so that you have the ability and the opportunity to interact with the market, because this is very, very important. Okay, if you have any questions, please drop them in the video or the Discord channel. Thanks for watching.